Man. Guys, I'm coming. Give me some seconds. Okay, so guys, good evening. Our board is and everything is ready. Oh yeah, so only 8 people. Let's wait some few minutes. You can share the live. Let's say we can get like 30 people, 40, then we can learn something. All right. So let me sit as we wait. So how has the day been going? Francis Body, what's up, bro? Alright, so this is just 1 month program, okay? And within this 1 month, I'm sure it's going to impact a lot of you guys. For you to know certain things about this market. You know, a lot goes into the market, and if you actually know what you are doing, you tend to make money out of it. But if you don't know what you are doing, the market will keep messing you up. Alright, so I will urge you all cooperate with me as we all do this together, and I'm sure within the 1 month period everybody is going to be better. Alright, so let's get right into it. Give me 1 second. What do I need? Hopefully get your advice on it. Alright, bro, so you can DM after the class, okay? You know how to DM me. You can get my contacts everywhere, so it's not difficult for you to reach out to me. Okay, so let's start something. And the last time I told you guys that we are going to start with candlesticks. For you to know candlesticks very well. After knowing candlesticks, then we tackle market structure overall, because to me, if you know market structure, you know how to read the candles, and you know how to mark zones, you are done with trading. And I'm sure you agree with me on this. Those sticks. Guys, is the network okay? Because it looks like the network is not really stable. Is it okay for you guys at your end? Are you getting everything clearly? Let me know, okay? Yeah, I hear you. Yeah, I am. So will this live be saved? I don't know. Maybe yes, it will be saved on TikTok, but extracting it, downloading from TikTok to Telegram is going to be like 2 gig or 3 gig. I don't know how I can actually, yeah, it is lagging behind. I don't know what's happening. I think it's my network. No good that phone. They keep messing up. It's not really stable. Let's see. So guys, kindly share the live. Now let's get right into it. So what do you know about candlesticks? And as you all know, candlesticks was invented by a guy called Mona Lisa Homer, and this has been what everybody is using now. If you look at the charts, you will realize that we have different types of charts, right? We have hollow charts, line charts, area, line with markers, candlesticks, plenty. But the popular one right now in this era is the candlesticks. So if you know how to read the candlesticks, you will be able to make some good trading decisions. Okay, so if you want to know candlesticks very well, you have to focus on two things, which is the opening price, the closing price. You need to know the opening price, the closing price. That is going to tell you whether the candle is a sell candle or a buy candle. You'll get to the bullish and the bearish. But for now, let me use a sell and a buy for you to know. So if you know the opening price and the closing price, that is where you'll be able to know that, okay, this particular candle is a sell candle, this particular candle is a buy candle. I hope this is clear. This is beginners class, okay? This is for beginners, so if you have no idea about the candlesticks, take advantage of this. For those of you who already know, still take your time, because there are some beginners in the house who need to know this as well. Alright. So if you guys understand this, let me know. Okay. The music. Alright, I think it's clear now. It's okay now. So, do you understand this part? Knowing the opening price and the closing price of the candle. Sometimes you are going to see wicks. Okay? Sometimes you will see wicks. But the wicks, I will explain the wicks later. But for now, your focus, when you pick a particular candle, your focus should be where it opened and where it closed. That will give you an idea of the type of candle it is. I hope this is clear. Guys, is it clear? So that we continue. Friends, I'm in Accra, I'm interested in trading. Alright, join us to the end and you will get to know more. Okay? So I believe everybody understands this. So now, once you know that a candle, when you pick a particular candle, you have to look out for the opening, the closing price. What next? Sometimes you see a candle like this. Okay? You see a candle like this. Mostly when you pick the chart, this is the candle you are going to see much often, right? You are going to see this candle much often, and you realize that the market, it's pushed here, it's pushed down, it has this, it has that. So for this particular class, I was trying to get a red marker, but I didn't get a red marker. So one of these will be my bullish candle, and this will be my bearish candle. All right. So the black color will be my bearish candle, and any of this will be my bullish candle. I hope you guys get this so that you not be confused. Okay. Even though the color doesn't really matter, what matters is the opening, closing, lowest point or lowest price, and the highest. Okay, so when you see a candle like this, here is once you know that this is the opening and this is the closing price, meaning this is the lowest point. Okay, over here the market it pushed all the way down to this point, okay, and got rejected and closed here. So here is the lowest point, right? And here is the highest point. It came all the way when it opened at this level, okay, and it pushed up to this level and then got rejected and came all the way down to this point, and after here it pushed up again and closed right here. All right, so this is the pass of a candle. Okay, this is the path of a candle. When you pick a candle, you are going to see the highest price, the opening price, the closing price, and the lowest price. I hope this makes sense. Let's use blue for bullish. Okay. Alright, so blue for bullish, guys, I get it now. So it means you are going to use the black for bearish. So take note of that. I think this is clear, so we can continue on. Guys, is it clear? Anybody has a question? Anybody having a question? Or we can continue on. Right, it's clear. So now, when you come into the market, we have two major candles that we have to focus on. We have bullish candles and bearish candles. Bullish candles and bearish candles, whereby the bullish is for the buys and the bearish is for the sells. So how are you going to identify that this particular candle is a bullish candle and this particular candle is a bearish candle when you have no idea, or when all the colors is equal, the colors is the same, there is no color change? You should be able to identify bearish and bullish. Now these days they've made it very easy, okay, just like someone suggested this should be our bullish candle. But if you go to you open a chart and you realize that all the candles are having the same colors, okay, all the candles are having the same colors, how are you going to identify that this is a bullish candle and this is a bearish candle? All right, so I'm going to let you know how to identify that this particular candle is a bullish candle and this particular candle is a bearish candle. And for you to, let's pick bullish first. So bullish candles. For a bullish candle, the market opens at the bottom and then closes at the top. Okay, so in this case you are going to have this as well. Here will be the opening price, opening. Here will be the closing. Here will be the highest, and here will be the lowest. Alright, so this is a bullish candle. When you see a candle which opened right here and closed at the top, that is a bullish candle. So without you knowing the color, you should be able to identify that no, this particular candle is a bullish candle or that particular candle is a bearish candle. I hope it makes sense. What is spoke, bro? And now, once you know the opening, the closing, you should also don't forget about the wicks. Most times the wicks count. Now, let's try to explain this. It means that what this means is that the market opened right here, okay, and as soon as it opened, it went all the way down, meaning the sellers pushed the market down, but buyers didn't allow it to go down, so they pushed it all the way up to this level, and there were sellers right here who also pushed the market down here, and then it closed. The session ended, so it closed right here. All right, so this is a bullish candle. Now for bearish, so for bearish candle, it opens at the top and closes at the bottom. Alright, and here is the highest point, and here is the lowest. So these are the differences. Okay, for bullish candle, you are going to see it opens at the bottom and closes at the top. For bearish candle, it opens at the top and closes at the bottom. So if you have no idea about candlesticks, this should be at your fingertips. Alright, this should be at your fingertips. When you see that a candle has opened at the bottom and it is pushing to the top, that is a bullish candle. I hope this one is beginner's class, you all understand. So we are jumping right into it. Okay, the book, the middle of the book, candle. You mean this one, the body? Okay. Check the distance between the opening and close. Okay. Right. So this one stands for the body. We use this as body, and this one, some people call it shadow, some people call it wick. I call it wick because I learned it was wick. That was how I learned it. I didn't learn the shadow part. I only learned it was wick. So I use that long tails, the tails. Some people also call it tails. So we have wick, we have shadow, and we have tails. But I use it as wicks. So these ones are the wicks when this is the body. Alright. This is an easy part. Now let's go into the patterns. Take it again. Alright. What I mean is that when you are talking about bullish, when you take a bullish candle for example, you are to focus on the opening price and the closing price. And for a bullish candle, it opens at the bottom and closes at the top. Okay, that's a bullish candle. It opens at the bottom and closes at the top. You will see wicks sometimes because when the market opened, when the candle opened, it pushed down, okay, but it couldn't hold. The pressure, the buying pressure was high, so it went away, it went up, leaving a wick here. Okay, and it went all the way up to this point, and there were sellers also. They also pushed the market, and the session ended right here. Okay, remember each candle formation has a particular session that it ends. All right, when the session is over, the candle closes. I'm sure you all know this. So when it opens, there is a time. It has time on it. They have timed it that this transaction is supposed to end within 15 minutes, within 30 minutes, within 24 hours, within 6 months, within 1 year. So it depends on the time frame you are using. All right. So this one opens here. It pushed all the way up to this point. That's the highest point. Then it comes and closes right here. When you see this, that is a bullish candle. Okay. And this one, if you take this one, can you guys see? Okay, yeah. So when you take this particular one, this is bearish candle, and for bearish candle, it opens at the top. Remember, bullish candle opens at the bottom, bearish candle opens at the top. Alright, that's the difference. So it opens at the top, it pushes up, creating a wick, then drop massively to the bottom, to this point, and then the bias, just like I explained here. Okay, so right here, it came all the way here, but there were buying pressure, it pushed it up, and the session ended right here. Okay, so when you look at the chart, sometimes you will see that a candle will open like this. Open here. Okay, yeah, it will open right here and it will drop. Somebody will say, okay, Charlie, the market is selling, let me enter. You enter, it comes all the way here, then you will see that it will go all the way up. Then this will be a wick, right? At the end of the day, you entered right somewhere here. You entered here because you saw that the market opened right here and it was selling. So as it was selling, you thought the market is going down, so let me enter. You entered and boom, the buyers pushed the market up and it came to close here. In this case, the closing price didn't end here. Right? It came to close here. So now the candle that was strong bearish has ended bullish. I'm sure you guys have seen this before. So I always tell people that before you enter into a market, make sure a candle has closed. Do not enter in the middle of a candlestick. Okay? Make sure the candle has fully closed before you make an entry. If not, you will be in a dead shape. Right? Can you scalp the candlestick? Yeah. Oh, it happens. It happens to a lot of people. It happens to a lot of people. Guys, if you haven't followed me, you can follow me as well. Alright. So, I hope everything is clear. Let's continue on. If you don't understand anything, just say it, okay? Comment, let me know which part you don't get so that we can handle before we proceed. So now, let's talk about candlestick patterns. Since you understand candlestick, now we are going into the patterns. This is what you need. For you to know whether it's a buy candle or a sell candle, that is just the basics. Okay? So now we are jumping into the patterns. If you know the patterns, then you go transfer into the chart and see how it is. So we are going to talk about 5 different patterns. Five patterns. 1. Engulfing. Stars. Tweezers. Doji. So these are the candlesticks I use. Alright. I don't use any other candlesticks apart from this. Okay, it's clear. Hammer or pin bar, they are the same, bro. Hammer or pin bar, they are all the same. So we are first tackling the engulfing. We will finish all candlesticks today. Okay. So or we should learn some and leave some and come back tomorrow and continue. I think we should finish everything. So the first one, engulfing. Engulfing candlesticks. Let's finish, no problem, bro. Okay, so when we talk about engulfing candlesticks, engulfing simply means overpower. Alright, engulfing simply means overpower or overcome, but I like the overpower. So you will see 2 particular candles. So properties of engulfing or engulfing candles, they are two candlestick patterns. All right, two candlestick patterns, and we have bullish engulfing, bearish engulfing. When I was in JHS, one of my teachers said, if you fail BEC, it is because of your handwriting. So take it like that. All right. Yeah. That's a candlestick that engulfed the previous candle. Correct, bro. All right. So we have bullish engulfing and bearish engulfing. What is a bullish engulfing? A bullish engulfing is engulf a candle. Let's go right into it. Am I going too fast or it's normal? Am I moving too fast? Because I remember when I was teaching some students who came here, it took us like 3 days to finish candlesticks. Guys, am I moving too fast or it's normal? It's okay. Okay. All right. Let me ask if these people are on the call. Okay, not too fast. Right. Okay, so bullish engulfing. When you are looking at a bullish engulfing, you are going to see that previously there was a bearish engulfing, a bearish candle. All right. You will see. Okay, let me give you some kind of notes. Okay. So for a bullish engulfing, it is a two candlesticks pattern whereby the bullish candle engulfs the bearish. So, and this usually happens in a reversal. This is a reversal candle. Okay, this is a reversal candle. So you may see the market dropping down. Okay, and then when it reaches this level, you are going to see a bearish candle. Then after the bearish, a nice bullish candle will form whereby the closing price of the bullish candle is higher than the opening price of the bearish candle. Remember, this is a bearish candle, so it opened right here, okay, and closed right here. And now this bullish candle opened here and closed here. So for you to get a bullish engulfing candle, a bullish engulfing pattern, the closing price of the bullish candle should be higher than the opening price of the bearish candle. I hope this makes sense. The closing price of the bullish candle should be higher than the opening price of the bearish candle. That is a bullish engulfing. I hope this makes sense. I hope it makes sense. So always, for you to know, okay, this is a bullish engulfing, know where the bearish candle opened, where the previous candle opened and closed, and where the bullish candle opened and closed. If it closes above the opening of the bearish candle, then you can say a bullish engulfing has formed, and hence there should be a change in direction. The market will start pushing up. So if you were in the sell position, it means after seeing this pattern, it means you should get out of the sell. So sometimes you may wait for a pullback like this, then you enter for a buy, your stop loss just below here. Okay, I don't trade SMC, so if you ask me SMC questions, I may not answer. Okay, Yeah. So if you want to spot bullish engulfing, just look into the market when you see a decline market or a downtrend, and there is about to be a change in direction. You will see a bullish engulfing, and after seeing a bullish engulfing, you realize that the market starts pushing up. Sometimes it fails. Sometimes it fails. So don't forget that one as well. I hope you get it now. Guys, is it clear? Okay, enjoy, bro. Do you all understand? Please, does this bullish engulfing work in all time? Oh, I just said it. Sometimes it fails, but it fails mostly. It will fail when you spot it at the wrong levels. Okay, if you are trading, let me show you this. Okay, so you have this, okay, and then you spot this is a resistance level, right? This is a resistance. The resistance has not broken yet. Forget about this part. Or let me use a critical one for example. You are spotting a bullish engulfing on a resistance level. It will fail. Okay, so another property of a bullish engulfing is that they are formed on support levels. They are not spot on resistance. If you see a bullish engulfing on resistance level, ignore it. You are only focusing on the support levels. If you see a bullish engulfing on support, take advantage of it. Or a demand zone. So they are being formed on demand zones or support zones. If you see it on resistance or supply, ignore it. Okay? I hope this makes sense. Guys, I hope it makes sense now. What is the perfect time frame to spot engulfing? It works on all time frames. It depends on the kind of a trader you are. Okay? If you are a swinger, a swing trader, you should be focusing on daily, weekly, monthly, and your entry at H4. So if you see that daily time frame has given you a bullish engulfing, you shouldn't joke with it. Alright, so it depends on the kind of a trader you are. If you are a swing trader and you spot a bullish engulfing in 20 minutes 30-minute time frame, just ignore it. Alright, and if you are a scalper and you see a bullish engulfing in monthly time frame, you don't need it. Even daily time frame bullish engulfing, you don't need it, because you are looking out for some short range. Okay, so you don't need a bullish engulfing in daily time frame for anything. Alright, so it depends on the type of a trader you are. That will determine where you should focus on spotting engulfing candles or spotting patterns. I hope this makes sense. Yeah, so know the kind of a trader you are, and that will tell you where you should spot your patterns. I hope this is clear. So we are moving to the bearish engulfing. So for bullish engulfing, 1, there are 2 candlesticks formation. 2, the opening price or the closing price of the bullish candle should be higher than the opening price of the bearish candle. That is the second property. 3, it is a buy confirmation. 4, they are being spotted on support zones or demand zones. 4 different properties. Maybe I can give you more, but I can't remember everything. Ask my people, they will tell you. Alright, so let's move on to the bearish engulfing. bearish engulfing. And for bearish engulfing, previously, or they are usually spotted on resistance and supply zones. All right. So in the beginning, you will see that the market is pushing up, and then a bullish candle will form. After the bullish candle, you will then see a nice bearish candle forming, meaning there is likely a reversal. Okay, so we are interested in this. They are formed on resistance levels. Okay, and for you to know that this is a bearish engulfing, you should focus on the closing price of the bearish candle being lower than the opening price of the bullish candle. All right, the closing price of the bearish candle should be lower than the opening price of the bullish candle. And you know that the bullish candle, this is the bullish candle, whereby here at the bottom is the opening, this one at the top is the opening. I hope you get it. So this one closed below, this one closed above. So if you see that the closing price of the bearish candle is lower than the opening price of the bullish candle, a bearish engulfing has formed. I hope it makes sense. Okay, somebody asked a nice question. I will answer. Okay, guys, I hope it makes sense. Right. So once you see that the closing price of the bearish candle is lower than the opening price of the bullish candle, you should know that there is a reversal is likely to happen. So if you are in a buy position, you should be getting ready to get out. All right. If not, the market will come back and hit your break even or even your stop loss. All right. So this is bearish engulfing. Somebody asked a nice question, so let's answer that. Come again. I mean, for a bearish engulfing to form, we are focusing initially for you to know that bearish engulfing is forming, there will be an uptrend. Okay, the market will be pushing up, creating higher highs, higher lows, and when it reaches a resistance level, okay, at the resistance, you are going to see a bullish candle formation, and then after the bullish candle formation, there will be a bearish candle which will close below the opening price of the bullish candle. Okay, so when you see that a bearish candle has formed and the bearish candle has closed below the bullish candle, this is a bearish engulfing candle pattern, which means that there is a reversal about to happen. So you see the market dropping dead. Forget about how I drew the candles. I just want you to understand this. Okay, I hope this one makes sense now. Bro, I'm not doing analysis, so don't ask me about gold. We will still look at it before we close for the session. Alright, so I hope now it's clear. Okay, so we are done with this. If you have a question, let me know. Fake outs. We are not dealing with fake outs. We will deal with fake outs when we get to zones. You will surely get there. So just follow it systematically. Alright. So when you see this pattern at the top, at the end of a bull run, or at the end of an uptrend, it tells you that there is a reversal about to happen. So if you are in a buy position, get ready to get out. All right, I believe everyone gets it now. So let's try and look at examples on the chart. Okay, okay, so this is gold on 30 minutes time frame. So first of all, let's look for a bullish engulfing. Okay, let me turn to page 4. Okay, someone asked that there was a bearish engulfing on daily time frame, but gold is buying. Why? Okay, so the reason is that, look at daily time frame. Good. So now you can see this is a bearish engulfing. Okay, look at the bullish candle and look at the bearish candle. Here is the opening of the bullish candle, and here is the opening. Look at where the bullish candle closed. That is where the bearish candle opened, and look at where it closed. Closed lower than the opening of the bullish candle. So this is a bearish candle, and this whole pattern, we will talk about that in a few seconds, a few minutes. All right, so now after a bullish engulfing, there has to be a pullback. So this candle you see here is a pullback candle, which means gold can still sell down. All right, this is a pullback candle for another continuation push to the downside, and there was a support right here, so it's respected. But since this pattern has formed, there is a potential for the market to keep dropping. So this is a bearish engulfing pattern, 1-2 candle. Remember, it's 2 candlestick formation, and the bearish engulfing is lower than the opening of the bullish candle. The closing price of the bearish candle is lower than the opening of the bullish candle. I hope you guys understand now. I hope you understand now. So that is the reason you see gold buying. Which candlestick shows trend reversal? This is one of them. Engulfing. Do you think gold gonna come to 2060? Possibly. Okay, so let's look for more examples. Right, let me clear the chart first. I hope you guys are following. So look here, you see we have bearish candle and we have bullish candle, whereby the closing price of the bullish candle is higher than the opening price. Oh no, than the opening price. Yeah, here is the opening price of the bearish candle. So the closing price of the bullish candle is higher than the opening price of the bearish candle on a support zone or a demand zone. Have you remembered? You remember that? So this is a bullish engulfing, and for the market to fly. Okay, I hope you get it now. So this, we have a bullish engulfing pattern right here, and the market flew today. Yeah, so I'm sure you guys can see it clearly now. This is a bearish candle, and this is the zone. Don't forget, this is the zone. So the market tested the zone, gave us a bullish engulfing, and the market flew, testing these levels, so there is a potential sell. Okay. Guys, do you understand? If you understand, let me know. So we move on to the next pattern. Okay, let me know if you understand. So we move on to the next pattern. So now you've seen bearish engulfing, you've seen bullish engulfing, bearish engulfing, bullish engulfing. Do you all understand? Let me know. So we have bullish engulfing here. We have where we have bullish engulfing, because the market is still an uptrend. That's why you are seeing bullish engulfings, bullish engulfing, bullish engulfing. Even here, there is a bullish engulfing, and the market keeps flying. All right. So I hope you guys. No, I don't understand. Which part don't you understand? Gentility. Which part? Which part don't you understand? Let me know. Which part don't you understand? Which part don't you understand? Let me know, okay? Let me know which part you don't understand. The bearish. You don't understand bearish what? Bearish engulfing. For bearish engulfing, okay, for bearish engulfing, you are looking out for a bullish candle, okay, and a bearish candle, whereby the closing price of the bearish candle should be lower than the opening price of the bullish candle. This is a bullish candle, the black, and the red is the bearish, whereby you see the black candle long below the opening price. The bullish candle opened here and closed here. The bearish candle opened here and closed here. So when you see that a bearish candle has closed below the opening price of a bullish candle, this is a bearish engulfing. All right. At the same time, when you see that the opening price, we have one here. When you see that the closing price of a bullish candle is higher than the opening price of a bearish candle, that should tell you there is a bullish engulfing for the market to keep flying. I hope you understand now. It works on all time frames. You can spot it on all time frames, bro. All time frames, you can spot them. So if you are looking for entry, as a day trader, you can focus on 1 hour, you can focus on 30 minutes, you can focus on 15 minutes. You are looking for those patterns as your third or fourth confirmation for you to enter into a trade. I hope you get it now. We are going back to the board and continuing with the next pattern. Do you all understand? Explain again support and the bullish engulfing. So I hope I have now. And remember, okay, so if you are looking out for bullish engulfing are usually formed on support. So is this one on support? Let's find out. Is it on support? And the answer is yes. Look at it. Look at it. So on the support, it formed a bullish engulfing and flew. Yeah. So guys, let's go back to the board. How do we see support? Oh, Gabby, is that you asking this question? We will get there. Maybe tomorrow we will tackle support and resistance. So don't worry, okay? We will tackle support and resistance tomorrow. So please go full margin sell. I have been looking for a trade teacher since. Alright, so now you've seen one here. Alright, so the next one is stars. We are done with engulfing. So you know about bearish and bullish engulfing and bearish engulfing. So now we are moving on to stars. And when we talk about stars, we have morning star and evening star. And like I said, we have morning, evening star. Right. So, what is a morning star and what is an evening star? First of all, a morning star is a 3 candlesticks formation which usually forms on support or demand. Alright, a morning star is a 3 candlestick formation which usually forms on support or demand, and it is a reversal pattern. Okay, it usually forms on support or demand. It is a reversal pattern. It's also we are going to handle those ones tomorrow. For today is about candlesticks. Understand candlesticks. Okay, you need to understand candlesticks. Then you get to understand market structure. After knowing market structure, then you can mark zones. So just take your time and relax. This is a 30 days program, so you guys are going to learn a lot. Open up your mind, be ready to learn, and you are going to grab a lot. Okay, so morning star. How do you spot morning star? And morning star is a 3 candle confirmation, like I said. So how are they formed? Previously, the market will be an uptrend, downtrend, sorry. So you will see the markets dropping down like this. Okay, so at this level, you will see a bearish candle. Sometimes, take note of this, sometimes you are going to see a bullish candle but smaller, or that one will still be a bearish candle, and after this you will see a strong bullish candle closing above this candle and mostly above this candle as well. All right, let me draw it well. Sometimes this candle can be doji, a pin bar, or a bodied candle but small. Okay, a morning star. Pay attention to this. It's very tricky. Okay, so guys, pay attention to this. This particular pattern, there are 3 candles. The first one, is going to be a bearish candle. Okay, the first one will be a bearish candle. The second one, this particular one, it can be bearish, it can be bullish. It doesn't matter, but it has to be a small candle. Okay, either a pin bar, a doji, or a bodied small candle here. And after this, you will see a strong bullish candle closing above this candle, and most of the times closing above this as well. Okay, when you see this on a support or a demand zone, this is a morning star, which means that the market is ready to go in an uptrend direction. Okay, so this is how we spot morning stars. What do you start? Please don't rush him. Let's get the first. You know it's first. Yeah. So if you get, most of the time, you will see that the this particular candle, the bullish candle, will be at the closing price. It will also close just at the opening of this the bearish candle. It is valid. Okay, so let me draw them here. And then please note this well, like take a good look at it. I'm going to draw it in 3 forms. I hope you can see the difference. You guys can see the difference, right? When you pick this one, you can see with this, the bullish engulfing is higher. The bullish candle is above the opening price of the bearish candle. When you pick this part, the number 2, so we have, this is an A, B, and C. So when you pick A, you realize that this is bearish candle, this is also bearish or bullish, doesn't matter. The focus mostly is here. Alright, and you realize that this bullish candle has closed above this bearish candle, the opening of the bearish candle. That is the A. When you choose B, when it comes to B, you realize that the bullish candle closed halfway below the opening of the bearish candle. Alright, this is also a good pattern. We will see some in the charts. And this one, the C, the bullish candle closed at the opening of the bearish candle. So A, B, C, which one is a correct morning star? According to the explanation I gave you, which one is the correct morning star? TPNS of Focus and learn, bro. We are going to talk about them. Just take it step by step. Don't rush the process. You'll be in a deep shit. I've warned you. This market has no respect. Okay. Alright. A, and C. Keep it coming. Which one is correct? And why nobody is selecting B? Why are you ignoring B? Any answer? Why are you saying B isn't correct? Why is B not correct? The first and second. Okay, explain why. A and C. Okay, explain why. Why? If you haven't joined the Telegram community, the link is in the bio, okay? The first bearish candle is not engulfed. Alright. Somebody also said, oh. So now let's look at it. We will also look into the chart, find some of them, and see the end results. Okay? That one is going to help you to understand them better, just like we did with the engulfing. So let's pick the first one. With the first one, when you see something like this, to me, this is the best morning star. Okay? The best morning star. This one, I don't trade. Okay? When I see the B formation, I don't trade that setup. When I see C, I also trade. So I trade A and C, I don't trade B. Why? Because due to the fact that it failed to engulf the bearish candle, there is a possibility for this market to keep selling, because here the opening price is a strong resistance. Okay? An opening price of a bearish candle is a strong resistance. So for a market to keep pushing up, it has to break the resistance at the opening price here. Okay? So if it fails to break or fails to close this above the opening price of the bearish candle, it has potentials to fail. Okay? Even though this one can fail, but the rate at which this one fails is higher than this. I hope it makes sense. So if you are looking for a morning star, look for a morning star whereby the closing price of the bullish candle is higher than the opening price of the bearish candle. This one, like I said, it can be doji candle, it can be pin bar, or it can be any form. That one doesn't really matter. Okay? So with the B, I don't trade it. When I see B morning star form like this, I ignore. When I see morning star forming whereby the opening price is equal to this, sometimes I enter. But this one, it is about 60%. About 60% of the time it goes. But this 80% or even 90%. Anytime I see this, I don't joke. Alright? But if I see this, sometimes I ignore. But this one, I don't tackle it at all. Alright? I hope you guys understand. Any question? ABC is correct because the candle can bring them anytime. We are looking at bullish markets. I think A. Alright, the first bearish.